the debt is unsustainable. And it was only a couple of trillion back then, but here it is now 35 trillion. And people think, well, you see, well, what's the problem? Why can't it go to 100 trillion? It got to 35 trillion. And so people just have a false sense of complacency that it's gone on for this long, so it's going to go on forever. And, it won't. Nothing that's unsustainable is going to go on forever. The fact that it's gone on as long as it has, though, has gotten people to believe that. But it just means that, we're that much closer to the collapse. And when it happens, it's going to be even worse because we're collapsing from a much higher level, right? We have a much bigger bubble now. And so it's far more catastrophic when the air comes out than would have been the case had it happened 10 years ago, 20 years ago. And in fact, the more catastrophic it obviously is, the more pressure there is on the powers that be to delay it even more. Because it's like so bad. I mean, we keep saying, well, it's our dollar, it's your problem. And to an extent, it is everybody's problem. But the longer they stay with it, the bigger that problem gets. And we certainly accelerated it by weaponizing the dollar. I mean, as if people didn't have enough economic reasons to de-dollarize. Biden gave them a big political reason to do that by weaponizing it, by threatening sanctions and to kick you off of Swift or to confiscate your treasuries. Pretty much we told the world, get rid of your dollars, right? I mean, that's what, which is the dumbest thing that we could have done, because that's the only reason that the whole thing isn't imploding, because the world has been dumb enough to stockpile our dollars. And we just gave them another powerful incentive not to do that. So we know it's happening. The question is, when will the pace quicken? And I think as the dollar starts to fall, and it's just started now, again, the dollar index is off about 10% from its peak, which is set, a little over a year and a half ago. And again, we're close to an all-time record low against the Swiss franc. We only have to drop another maybe 7.5% to hit an all-time record low. And that's going to be the first currency, I think, that the dollar hits a record low in. But it's not going to be the last. More currencies. But I think once the dollar index really starts to break down, maybe the breaking point is 80, maybe it's 70, somewhere around there. But once the dollar starts to fall faster, and when inflation rears its head in a bigger way in the US, but the Fed doesn't do anything about it because we're in recession and the unemployment rate is up, and the world kind of, comes to this conclusion that, we can't pay, inflation is never going away, and, the last man, stuck with dollars is the loser, right? Right now, people, the central banks around the world are slowly divesting of dollars because there's no real urgency, right? The dollar's not crashing, and so they can slowly work their way out of the problem. But as the dollar starts to fall more, it creates a bigger sense of urgency that I better get out, because the longer I sit here, the more I'm going to lose. And so that's going to accelerate the rush to get out of the dollar, which is why eventually it's just going to implode, because now so many people want to get out and there's nobody to get in to take the other side of the trade. Well, remember, we have built this consumer-focused economy based on the dollar's reserve status. Better than 70% of our GDP comes from Americans just spending money. And they spend a lot of that money on imports. And so when the dollar crashes, those imports are just not coming in anymore. And so all of these stores are just going to have empty shelves. And so when there's empty shelves, they don't need their employees anymore, right? So, this whole service sector economy is going to be the hardest hit by the dollar crash, right? Because the consumption is going to come to an end. And that's the lion's share of our phony economy. It's all based on services. And that's where you're going to see the biggest hit. Now, if you're manufacturing, right? If you're manufacturing stuff that you can export, you're going to benefit from that. Your costs, some of your costs will go up. Your labor costs are going to collapse, right? Because the wages that you're paying your workers have crashed because the dollars have crashed. Your raw material costs, they could go up because you're globally, when you're a business, you're competing globally for resources, raw materials, but labor is pretty much, captive.